basically an overview of investment in Africa. I know that people are bullish, there's growth, it's been consistent post-credit crisis, there's new opportunities in Africa, but you know, we talk the talk. Does it translate in investment tangibly that we're seeing?
Yes, this kind of program actually opens up opportunities for us to exchange ideas, what is going in other markets, and then see how we can apply it to our market, which helps to deepen the African market. So the investment summit has been a good opportunity for us to exchange ideas with from different countries, and it's been a worthwhile experience.
We do know that foreign direct investment into Africa is up by about 80% in general. But where's the money going? Which regions, which sectors? Well,
there are lots of investment opportunities in Africa. The oil sector, I mean, a lot of investment is going there. A lot of investment is going to infrastructure. A lot of investment is also going to manufacturing and even agriculture. You know, Africa is a vast land, and it's various countries, especially the sub-Saharan area, a lot of investments are going there, and the stock market too.
Let's talk about the stock market, because many foreign investors are saying, give us more dynamic products when we enter the market. Give us variety, give us more companies that we can choose from in terms of listed equities. Just give us diversity. What's the shortcoming in Africa?
Well, for Nigeria, the effort has been made to get the communications company listed, the oil and gas companies to get listed, and then, of course, we're also looking at deepening the products, the options. I mean, for instance, in Nigeria, we have largely trading in equities. We are not talking of exchange-traded fund, and we are looking at how to get it introduced, and just to deepen the market, give people alternatives, especially when there is a market volatility, so that people can move to for a better yield and to protect their investment.
Exchange-traded funds, why do they present a lower risk option?
Well, the reason is that the underlying assets are already being traded at the exchange, and when you invest in a exchange-traded fund, you are investing in instruments created out of an underlying asset at the exchange. So, which implies that there's a lot of hedging, there's a lot of, I mean, in terms of risk, the identification and minimization. So that's why it's a new product that, I mean, look at some indexes in the exchange, oil and gas or banking. So you can take a section of the market and then create investments into it.
I mean, for anybody investing in an exchange-traded fund, and I often look at the ones that we're seeing within the commodity sector, is you can literally track the price of the commodity and the rate of return against the performance of the bourse in general. It's worked very well with gold exchange-traded funds. What about other resources?
Yes, it's the Botswana experience, yes. Well, the commodities market, especially in Nigeria, is not yet fully developed. And if exchange-traded fund has to be created in Nigeria, it has to be on certain sectors of the market. Despite the volatility of the market, especially the meltdown of the Nigerian stock market in the last 3 years, some sectors of the market still prove resilience. And when you look at what has happened between now, I mean, then and now, they have, like the food and beverages, they're still doing very well. The brewery sector, they're doing very well. Even the cement sector. So you can create a exchange-traded fund on those relatively stable equities on the market, and then create a market on it to deepen the market further, which is what we are trying to look at in Nigeria.
I mean, obviously liquidity is a huge issue across Africa, not particularly in Nigeria. But in Nigeria, everything's compounded by the recent reforms we're seeing of the NSC, hence a new council, a new board, of the banks, which constitute 1/3 of that stock exchange. How do investors view Nigeria? I mean, when they talk to you and they say, we want to come to Nigeria, we're not sure. Is that the feeling you're getting?
Yes. Early in the year, there was a lot of hope. Then towards the election, there was apprehension. And then after the election, we are still expecting the investors to come in and patronize the market. We believe this will be a reality because definitely stock markets are driven by all sorts of information available. And after the election, the expectation was that the market would come up. Then the issue of the banking reform came in, and that actually dampened enthusiasm in terms of when the issue of September 30 deadline came in for the rescued bank, which actually constitutes, before the crisis, about 40% of the financial system. So it is expected for investors to be apprehensive whether these banks will meet the deadline or not. But given the Nigerian spirit, I believe that these issues will be sorted out because it's a clarion call on the shareholders. It is also a lot of pressure on CBN to be able to seek a dialogue with the shareholders so that they can capitalize the bank, which is what we feel should happen. Yes, money has been lost. A lot of issues have come up. Right. The reforms has also helped in the reporting and the transparency in the system, but we need to move it to the next stage, which is the stage at which the shareholders will come together and recapitalize the bank.
All right, that's what's happening in terms of the peculiarities of Nigeria. But basically across Africa, we are seeing bank consolidation and mergers and acquisitions within the banking sector in Nigeria as well. And interestingly, we're seeing private equity companies coming to the fore. Now, usually private equity doesn't get itself involved too much within the capital markets in the early days, only when they're trying to create value for a company that they invest in. Is private equity going to be the new way for investing in Africa?
Yes, it's private equity has always been the forerunner of investment in the capital market. You see some people put capital together, fund the company. When they get to a stage of, then you get the company listed as a way out. And you see private equity working in certain sectors of the economy, like the communications, like in housing and estate development, and in some venture capitals. And the essence is that the initial investor comes in, run the company for 2-3 years, and then get listed at the exchange, and then for diversification of holding, and then for them to take the capital and then move on to some other. So we're going to see a lot of private equity investment in Africa. We welcome it because it provides the feeder into the capital market